Here we go. We're live.
Here we go. Egor, my man, how are you doing?
I am as good as I can be. I'm good and I'm happy. And then as soon as I remember what part of the market we're at, I'm extremely sad and upset.
Yes. So maybe we have so much to cover today. Let's just introduce yourself maybe so people understand a bit more who they're listening.
Good. Okay. I'll make this nice and quick. I'm Egor Sidleska. I run Magnet Capital, which is a asset manager in Sydney, Australia. We've been around for 5 years. We run 3 funds. The main fund invests in liquid tokens. So we do very little VC. We do a lot of our stuff on market. We do a lot of research on chain. We write about a bunch of topics inclusive of decentralization, DeFi, infrastructure, Web3, metaverse. Those are all of the areas where we do a lot of our investing. So all very prevalent topics to talk about today.
Okay. So 5 years means you've already been through a cycle, basically.
Yeah. I started a long time ago. I started mining in 2013. So this is my 3rd cycle. I'm actually 19 years old. All the gray hair is just from the nudge. I'm kidding. I started in 2013 and that was if you remember, that was the empty Gox era. So that was a very, very different cycle to the one we're at. 85% pullback. So not too dissimilar to this one, but definitely for the different reasons.
Yeah, you're saying very different, but actually with what happened last week.
Yeah, exactly.
FTX,
exactly.
Yeah. Anyway, we'll talk about that. I think we can just start. So we'll start basically with how you're approaching the investing landscape in 2022. So let's talk about what happened this year with the Fed that increased rates, which some people thought would never happen. And crypto obviously was the first to blow up with Luna, the CFI lenders earlier this year. So the space got destroyed. Yeah. Then we had tech stock that got destroyed too. Then we had the bond market that is down horrendously too. And now it seems that the rates are going maybe higher, a bit higher, maybe, and probably staying higher longer than we think, because it's what the Fed has clearly stated recently. So what do you do basically? How do you invest if you have a 100% crypto mandate with treasury bills that give you 4% risk-free, and investor that keeps selling tech stocks, which basically are less risky than crypto?
Yeah. Very, very good point and great question. 2022 is probably the worst year on record for crypto. We don't pretend to be macroeconomics experts. You have to have a view on where we're at in the market and where we're at in the curve and the cycle. But in reality, no one knows what decisions the Fed is going to make either way. No one knows what inflation is going to look like. So it's very, very hard to build a fund around that. And we don't pretend to do that at all. For us, we stick to our mandate. So we really think about why we're in this space. We think about the reasons that we got in, and the reasons are to keep the same today as they were 5 years ago when we ran the fund. And the basic fundamentals is that this is a very innovative technology that has a lot of future potential. And those are the things that you have to really focus on. And those are the things that you have to invest with. For interest rates and as you mentioned, the money printing got out of control in COVID. Really, the way that I look at it is there are only 3 levers to pull and to combat inflation. One of them is you raise the interest rate. The second one is there's not enough, then you have to print more money because that stimulates the economy. And then the third, which is if neither of those 2 things work, you've got a big red button. And the big red button is, if you read any total macro economists speaking now, it's basically the creation of a new currency or the devaluing of the USD as the global reserve currency. And you see this happen in Venezuela and Argentina and Zimbabwe, where hyperinflation gets completely out of control and people can't live their normal lives. And the government currency doesn't work because it doesn't matter how much they print. They're never going to stimulate the economy. And no one cares about interest rates because the currency is completely debased. So what do? You have to go to an alternative source that actually has some value, that allows you to buy groceries or allows you to take some value out of the country. So right now we're in a position where it's high inflation and growing interest rates. So there's definitely a limit to how high the interest rate can go because, and let's talk about the Fed here because that's probably the most relevant example. If you think about servicing the debt, I think the statistic that I saw was if they raise interest rates to 5.5%, then it would be 30% of their budget to service the debt, which is insane if you think about it. It means that 1/3 of every productive dollar in the US goes towards paying the interest on the debt. That's crazy. So right now, there's nowhere to hide. Crypto is not an inflation hedge. We've tracked very similar to the NASDAQ and in fact, considerably worse. Even gold has outperformed during the period. It did very, very well in 2020, 21, and then has trended exactly the same as with the market. And on a risk adjusted basis with an inflation hedge, gold really has not performed very well at all. So you're in this position where it's incredibly difficult to hide. Like there's nowhere to hide. Even your interest rate example, yes, you're getting 4% in treasury bills, but inflation's at 8%. So it's okay. You're only losing 4% a year. There are certain pockets of the economy, certain pockets of the markets, like commodities have done really well. But in reality, the majority of people, it's just going to be cash and wait it out until there's a big momentum shift, like the end of the war in Ukraine or the Fed pulling back on the interest rate hike.
Yeah. So what's kind of interesting is all the narrative that cash is trash in the last 2 years. And, like now, I mean, you just see like how much no one understands what's going on because cash is trash, but like now cash or treasury is the thing you want to own. Because even if you say it's, inflation is 8%, you get 4%. I mean, at least you know what you're getting and you're not losing.
Exactly.
You're not losing 10, 20% in a day, like even with some big tech stocks. So it's really interesting. And so basically how all this narrative about inflation edge actually was just a narrative and didn't play out.
Exactly. Yeah.
And so now, because we're talking about crypto today, who is there to buy the crypto bags today? And it's even more interesting. Today is the 14th of November, 2022. So last week we had this big FTX blow up, which is something that pretty much no one could have expected. And that burned. I mean, what happened earlier this year with these lenders and Luna and all that stuff, it burned mostly retail. Now we also learned that actually the big market makers in the space all were re-exposed to that. And probably why the incidents, the problems of last week happened. But now in FTX, we really had probably quite a lot of retail people, but a lot of institutions and some of the bigger traders in the space were all trading on FTX because you have the liquidity and was a great platform and really trusted. Everybody got burned and like massively. And so we were talking about the state of institutional investing. But after what happened last week, who is there to buy the crypto bags?
Yes, that is a fantastic question. So for the context, it's the 14th of November, 22. The Bitcoin price is 15,981 US. And just 4 days ago, FTX, the second largest exchange, which was probably up there with the top trusted crypto businesses globally, halted withdrawals because they were insolvent. And that blow up will be detrimental to the industry for years to come. We're going to see after all of this unravels, after every stone is unturned, we're going to find out who knew early, how many people were actually on the inside, who was allowing these trades. So apparently, I don't know if you heard, the rumor was that Alameda had a direct line to customer funds. It wasn't just FTT. It was that they were free willing to take out customer funds whenever they wanted from the back end, which again, it's rumor, but it is crazy. So this has done crazy amounts of damage, even worse than Luna. So the way that I thought about Luna was crypto projects blow up all the time. Yep. Luna was $40 billion in total, which is a huge amount of money, but Coin has lost $40 billion in one of the 6 or 7 30% pullbacks over the last couple of years. Not that big of a deal. Like, people get a little bit burned, traders get burned, and it's okay. When Three Arrows blew up, and that was a centralized hedge fund, it took a lot of traditional finance with it because it had loaned money from BlockFi and Voyager, and those debts were uncollateralized. So those guys became insolvent. But FTX was considerably worse because the premise was that people are not investing in Luna, the speculative token that you might make money from or you might not. And they weren't giving money to Three Arrows Capital, that was a hedge fund that was meant to generate you a return. They were meant to take risks and they were meant to trade on market. If you traded on FTX, you could be as innocent as depositing $1,000 to buy Ethereum, and you would just keep it there because it is one of the largest exchanges, completely trusted. So that blowback, as you mentioned, is incredibly difficult to stomach. And the fact that when all of this comes out, it's looking likely that it was a scam right from the beginning. It was like a Bernie Madoff type scam, and that everything he paid for was used custom funds. So it just blows my mind. And you're right. Who's that SPY bags now? There's a certain subset of this market that is truly unique. We call it productive assets. Productive assets, quite simply, are the new business models, the business model of the future, kind of powered by decentralization. They provide real yield. And that real yield is generated from fees that are collected from people using the network. And those fees are then paid back to stakers or token holders. That is as close as you can get to a company running a profit and issuing a dividend as possible. So there are pockets of the market which are outperforming. And if you look at the sidelines, VCs have collected an enormous amount of money over the last year. I mean, there's about $10 billion just off the top of my head I can think of in capital sitting on the sidelines waiting to invest. You remember A16Z raised $4.5 billion. Pantera's raising 1.25. Katie Harn is on 1.5 billion. Paradigm is 2.5. HiveMind 1.5. Cap, they did a raise at the end of last year for 1.1 billion. So you've got a tremendous amount of money that sees the future potential of this landscape and wants to invest in that. So there is an out, but we've been set back pretty far with FTX. I mean, we had an inflation print that was lower than the expected. The markets, the traditional markets and equities rallied, and even gold came up, and we got suckered with FTX and devalued 30%. It's a real shame.
So yeah, I agree with you that there is this, he's raising a lot of money, which but it's still not a lot compared to the market cap of the industry. I mean, we don't know how low it's going to get, but still not that much. And it's probably going not towards main protocols, but towards private deals and all that stuff. So, I mean, it's kind of difficult now to know what's going to happen with that. But like, I think one of the key points here is like to explain in your view to people why they should still invest in crypto now, despite all that stuff, and why probably the next 3 to 6 months maybe will be the moment you actually want to be investing.
Yeah. So if we think about where we're at in the cycle, and when I say cycle, I just mean the broader Bitcoin macro cycle. So the halving cycle is probably the easiest way to think about it. Every 4 years, coins reward halves. We are in the best risk-adjusted territory that you can get. The downside is pretty limited and the upside is incredibly powerful. But that alone is not a justification. It could go up lots, or you could potentially lose 50%, but probably not another 80%. That's not really justification. It's going to be really hard for retail to come back into this market in a big way. Right now, it's too dangerous. And in reality, most of the people probably shouldn't be invested anyway. the traditional retail mum and dad probably shouldn't be picking stocks, and by the same regard, probably shouldn't be picking individual tokens to invest in. You need to have a plan and a strategy. And for us, it's really transparent. For us, we look at this piece of technology, we look at what decentralization means. And for us, you can get a completely transparent, immutable technology that's deflationary system that is completely trustless. And that is what we're investing in. So our thesis has always been, for the future, our thesis has always been that this piece of technology is going to be considerably bigger. If Bitcoin has a 1% chance in becoming the money of the internet, then it has to be bigger than $16,000 US, has to be bigger than a $300 billion market cap. Yeah, the entire space has to be bigger than less than 1% of equities, or even smaller than that. So for us, we're long-term value investors. But for most people, they really need a plan and a view. They really need to think about why are they getting involved in the space. And the education here is so important. It's so important. Right now, you can get a very, very good position by simply just deciding that you want to invest a small amount of money over a long period of time. You just dollar cost average in this period. And frankly, it can be anything under the 200-week moving average. And you stand to gain a lot more than any potential losses, especially with money that you don't need. It's at this point in time, people akin it to gambling, and it's not. It's money that you're investing in for the future, and it can't be money that you need. It can't be money that you need to access. That's why whenever we talk to our investors, it's never 40 or 60% of their portfolio. It's 1% or 3% or absolute most 5%, because it is speculative. It is a new piece of technology. It's crazily volatile. So you really need to be comfortable with your allocation. I mean, how many people have you spoken to, over the last year before all of this stuff happened, as to how excited they were about crypto? And then since this started happening, it's gone absolutely dead.
So what do you invest in? If you're now late 2022, everything is blowing up. Probably FTX contagion is just starting. We don't really know. Probably there is a lot of projects that have their treasury lock on FTX. We don't know. Probably there is more lenders. I mean, there was BlockFi the other day. Probably more lenders around that have a lot of issues. We don't know. What do people buy, and do they even buy now? What would you tell people who are interested to invest into crypto? But of course, you can time a bottom, but like there's moments where it's kind of like, seems that now, what do you do?
Yeah. First of all, never try to time a bottom. It's never going to work. Chasing 100x opportunities or the next big bag is a fool's errand. There's crazy amounts of information asymmetry in our market, and it's just really, really difficult. It's really hard to get high quality information. So if you're really interested in the space, you have to first get educated. You have to first understand what it is that you're investing in, and start with the basics. Start by really understanding Bitcoin and Ethereum, and then you can start to build a thesis for what you think the future is going to look like. Every year, we write about what we think the future is going to look like. And we did a piece recently talking about why decentralization is important. And if you were taking a view, then these types of businesses or these infrastructure operators could be really influential to the future of decentralization. And I can walk you through it. So at the base, at the bottom end, you have layer ones. These are your decentralized smart contract forms. You need that in order to be able to build applications on top of it. You need that base. And that base largely is owned by Ethereum. It's the biggest, most widely used, most engaged with chain that has the largest user base and the best tooling. It also has the best type of education around it. There are countless YouTube videos. Even Adam Levine did a write-up on crypto which featured Ethereum. So you've got these incredible sources of information which can bring you up a level. And then on top of that, the infrastructure stack where we're spending a lot of time having a look is if the end game is a big application and you've got the base platform layer at the bottom, in between, you need the services and the infrastructure builders in order to make the application really useful. And in the middle, you've got things like oracles, you've got things like interoperability chains, which allow you to communicate between like Bitcoin and the Ethereum network, for example. You've got cloud infrastructure and identity. So that sits in the middle. And then your application layer are your endpoints. So decentralized finance, Aave, borrowing and lending, decentralized marketplaces, so on and so forth. So that stack, if you think that, if you're like us and you think that decentralization could be a thing in the future, how do you think about building the ecosystem? Well, if you find something that invests across that kind of landscape and you believe that that is a future, then that is one strategy. But right now it is hard. It's very, very difficult.
Yeah. And so I mean, we've seen in the last 2 years that there is some really interesting decentralized application, as we call it in the space. But we've also seen that these applications were mostly used. The principles of not having any third party and like having a kind of completely different governance is very interesting. And it can be built because we've seen that with this Uniswap protocol, which is basically a decentralized exchange that doesn't have order books, and that works like in a different fashion where people, the average Joe and Jane can come there and bring liquidity and kind of earn some fees for doing that. Then we've seen this platform called Aave, which basically is a decentralized borrowing and lending platform. So anyone can come there and lend their coins, and anyone else can come there and borrow their coins. And the relationship between the borrower and the lender is basically managed by a smart contract. There's no company in between. Everything is managed by these smart contracts, which are basically just triggering a liquidation if the price of the coin changes.
It's automated, it's programmed.
So that was really interesting. But again, being very crypto critical, which we have to be now, how much is this really needed? Because what we've seen is these protocols kind of growth hacking by emitting their own tokens and basically paying huge yields. The kind of principle, same in decentralized finance or gaming with Axie Infinity that everybody was talking about. The principle was always the same. Give completely unsustainable incentives to DeFi player participation. And so people would come and use the protocol and then hopefully stay, which didn't really happen. And so even if you have something really interesting, the actual usage is not there because the entire thing is incentivized by an unsustainable tokenomics token model. So who are the users of these DeFi applications or these decentralized gaming applications or anything that is decentralized in the future? If what we've seen now is that the space and that these protocols are built for basically a bunch of degenerates in the space who are just greedy people and just come there to farm these tokens. So basically to collect this kind of free money. And then as soon as there is no free money anymore, yes, I love the ethos of decentralization and all that stuff, but I don't care because I want to make money. So I'm just going to the next one that has free token to offer me.
Yeah. So
who is this targeted at, and is it really needed?
Yeah. I mean, the simple fact, like FTX shows you one fundamental use case why it is absolutely needed. This would have never been able to happen. Like you can never drive this back door with a smart contract. It's on chain. In fact, I was so impressed with the speed at which Twitter unraveled FTX in 24 hours. In 24 hours, they went from saying, we're fine to drawers are closed because Twitter was following every account. It was following every transaction on the blockchain. It went back to FCT transactions for Alameda. It found all of the Alameda wallets. Like, it was incredible. And that just doesn't happen in a closed, centralized system where you don't have that flow of information. The funny thing is that DeFi will be used by everyone and most people won't even know. They won't know that they're interacting with the decentralized finance backend. There will be a service provider, a business that acts as the front end for the customer that onboards the 1 million, 2 million users. They bring an element of user experience that, the average person doesn't need a MetaMask wallet or Ethereum in order to be able to access these borrowing and lending tools. And the reason that DeFi exists is because it's transparent. It's because it's immutable. It's because it's cheaper and faster and more efficient. It's because it's transparent. All of these key attributes are why the company that builds that user base will be really important, because they will use all of those attributes in order to build their business. It will be like me going out and building an application that says, hey guys, you can take either sides of the loan agreement. You can either use your existing money and loan it out for an interest, or you can borrow against any of your holdings. And it's not my balance sheet that's doing it. It's this big global decentralized ledger that you can see, and it's completely and utterly transparent. And I can't do anything with your funds because you can see everything on chain. And that will start to become a lot more prevalent. Those end user applications will become a lot more prevalent. You've got an example of Block Earner in Australia that utilizes the DeFi backend and gives people a really simple, easy to use interface that has an interest rate for your cash. Those kind of businesses will be the ones that win. And maybe it will be Twitter and Elon will create his own currency and stable coins will run on Ethereum. Maybe it will be Ledger that integrate into a mobile phone that has a hardware wallet. Whatever it is, most of the people won't know that they're on a blockchain backend. They just won't know. It's the same reason that me and you, we don't know how Swift works. I don't program in my international money transfer into the Swift network directly, but I can definitely send it from a bank to another bank, and I just need an account number.
So basically you're talking about this kind of fintech front end, crypto back end principle.
Mm-hmm.
And like, what would be interesting is to kind of like brainstorm a bit about how do we get there?
Mm-hmm.
How do we get there? Is it an entrepreneur pushed thing, or is it a customer asked thing? And that's the problem, because the smart customer, they want to see everything, but most people, as you said, won't know, and probably won't care. So it's probably not going to come from them. So then it needs to come from the entrepreneurs who are basically forcing this and saying, okay, in the sake of the ethos of the space, which we're trying to move forward to grow this industry and look more serious, we will use the actual transparency of the blockchain to build our applications, which is great. But the problem is, we've just seen most of the entrepreneurs in our space, I don't want to say are scammers. They're probably probably most of the blow-ups this year, I want to hope, and I probably hope that they started with good intentions and that it became too big, too fast. And then there was mistakes made, and then they had to try to cover up because you need to make your decision quickly, etc. But like, we really seen this year, and we're seeing it now, and probably going to see a few other examples, that we are talking about almost all of the major infrastructure players who are supposed to bring this space forward completely failed at it. And so if the customer is not, I don't want to say not smart enough, but like doesn't care enough, or is not technical enough to actually force the entrepreneurs to build with the transparency of the blockchain. And then on the other hand, you see the Coinbase, Kraken, etc., which we hope are going to be fine, but you never know. These guys, the CEOs, they really have this crypto ethos, and they seem to not be willing to compromise, short-term gains for security and the ethos. But a lot of others, probably the majority of the other, we've seen now, nothing worked.
Yeah.
And so like how does the future, how do we get to this fintech front end, crypto back end, which makes a lot of sense, which is kind of like the holy grail from here today, knowing that the customer is probably not caring or technical enough to force that. And the average entrepreneur who is supposed to drive the space is either losing control or either completely greedy.
Mm-hmm. Yeah. Well, the silver lining in what's happened with FTX is that this will definitely push people to try and understand self-custody better. This will push people towards taking their keys off centralized exchanges and trying to really understand like what it means to hold your own tokens. MetaMask does a great job of being that bridge between user experience and hardware. You can integrate your Trezor or your Ledger device and still use any Ethereum application. But it is difficult. I think the constant pressure on entrepreneurs to build the next unicorn that has to go up 300, 400 times every year for the first 3 years because they receive this crazy influx, tens of millions, hundreds of millions of dollars. It's an incredible amount of pressure. But I think if I was an entrepreneur, if I was a builder in the space, I would start to think about what people really care about. And they care about transparency. They care about that you're constantly risking things that you don't know what you're risking. Like in FTX, the depositors didn't know that they were risking their fund by operating onto the platform. There was a layer of action between what you thought the funds are being used for and how you thought you were trading versus what they were actually doing. The businesses of the future, just like we've seen with GMX and GNS, it's completely transparent. It's completely on chain. There will be avenues that allow you to get access to those kind of platforms that don't require a centralized party holding custody. And right now that's being built. It's clunky. It doesn't really exist yet. You need to still have a view on where you keep your private keys. I mean, I think that even keys themselves are incredibly difficult to understand. Like people get that they need a password to log into online banking, but that password can be recovered and Combank actually will be able to issue you a new password if you forget it. But if you do the same with private keys, obviously you lose everything. So that concept is really hard and most people just won't get it. So there is a bridge that needs to be fixed in order to onboard the next 5, 10, 20 million users, maybe 200 million users. And you're probably right. It won't be the guys that want to trade derivatives on a decentralized platform. Most people don't need to be able to trade options. They don't need to use 50 or 100 times leverage. In fact, they probably shouldn't ever use that. And maybe the killer application, maybe the next step is something like gaming or something like NFTs, which you don't need to have a view on Bitcoin to enjoy a really high quality game, or you don't need to be part of the Ethereum developer network in order to collect NFTs. So there are nuances that are coming out, but it's still hard and it's developing. And that's why there's so much opportunity for builders in this space and entrepreneurs to plug that gap. There is a broken bridge between users' experience education and then the powers of decentralization and what that ecosystem means.
Interesting. I have so many kind of thoughts at the same time. So main question is, how do we reach mass adoption? How do we make this thing useful? Is it even useful? It's probably useful according to the theory. The theory makes so much sense that you need to you can't trust a single party, which we've just seen now, and which we're seeing with banks in the real world. You need to find applications and you need to find real use cases for this. And currently, it really feels we're not there yet. And so the narrative the last cycle was the killer applications are stable coins. That's great. Or the killer application is yield, but the entire yield narrative and killer application was based on some
just nothing
illegal stuff happening. So if people need to self-custody, forget the mass adoption because people won't do it. And we're talking just about the people who are buying the coins and kind of speculating, but like not the actual usefulness of these people who actually don't even care about investing. They just want to use something that is better.
Yeah. Very challenging. The way that I see the market at the moment is this is our 2001 internet moment. In 2001, the majority of the market had come off. Internet companies had completely blown up. Online e-commerce wasn't a thing. There was no social media, no YouTube, no Facebook. It was an incredibly dark time for the internet. And the key question that was going around was, is this a failed experiment? Is this technology even going to make it? And then off the back of that, we've got things like WhatsApp and Telegram and all of the social platforms that have created a completely new way of living life, let alone way of communicating between each other. You can run an entire business for YouTube. Like, that's crazy. That's bananas. The way that people do advertising now is completely different. So we are at the bottom of the bell curve, staring up at the crypto tools that can help us piece this together. And we are trying to find that 200 million user adoption phase. And the thing that's stopping us, a couple of years ago, so the last cycle, we spoke about the three key things that are stopping mass adoption. The first was institutional involvement. So first, actually, enterprise grade custody. That was one. And the second was government regulation. And the third was institutional involvement. And we're past those, where those are no longer the biggest barriers. And we've got three new ones, which are mass awareness and education. And that one's really hard to measure. The second is the amount of technical expertise it takes to be part of this market. So if you did want to take advantage of Aave, for example, it's still the pathway there is still too many steps. And the third is that killer product. And that killer product is what we're asking ourselves now. But we can see slowly as we look in from 2001, as we look towards 2003, 4, and 5, and we start to see these new businesses coming up and these new use cases coming up, just from an institutional side, it's incredible if you take a step back and think about it. You've got Disney that is expanding to NFTs. You've got Adidas that's expanding to NFTs. You've got Meta and Instagram that are building a virtual world. They're building a metaverse world. You can now mint NFTs completely natively in Facebook. So it's starting to create that global adoption. And these are the really early signs. And even from the pure institutional traditional finance world, you've got JP Morgan that has done their first decentralized trade. You've got Bank of New York Mellon, Fidelity of a huge team that you can now buy, sell, transfer Ethereum. And if you think that Ethereum is going to be the decentralized smart contracts platform of the future, and right now Ethereum is yielding 4%, that's kind of analogous to leaving money in a bank at an interest rate of 4%. If you think that's going to be the future, it's not a bad bet to bet on the whole of the internet. So you've got these drivers that are really making a big influential impact, but it's very, very slow. Like, just because Disney released an NFT or Nike partnered with RTFTK, an NFT platform, doesn't mean that suddenly we're going to have Nike shoes that are on the blockchain. So there is that element that is missing. And every 6 months, every 12 months, we come up with these new use cases for crypto. Before it was decentralized finance, then it moved to NFTs and digital ownership of non-tangible assets. And before that, you mentioned it was stable coins. Now it's metaverse. And in the future, it might well be gaming. The reason that we like gaming so much is because you don't need to be an expert in finance to play a game and have real world rewards. You don't need to understand how Ethereum works in order to be able to collect NFTs. If you look back in the history of gaming, there's tons and tons of research on users playing World of Warcraft, collecting gold, and then having no avenue to be able to sell that gold. So they go on eBay, and it's a very clunky, like bad system. So the power of gaming is yet to be realized. And the problem with that is with Axie, we learned that if it's a shit game, it's not going to work. So you need a really high quality game if you want that to be the next big use case. But there is no one silver bullet. I can't think of anything besides that Bitcoin case where you have global remittance, or you have that trusted entity where you can hang your hat on and say, this is going to be the next global adoption. It's very, very hard to do that. And that's not what people should be focusing on. They should be focusing on, how do you make tangible improvements? How do you extract value by utilizing the core fundamentals of what decentralization gets you? And that could be remittance with Bitcoin. That could be creating your own new business or a marketplace using Ethereum. That could be using for your startup through an ICO. So these pockets exist, but there is no one knock the ball out of the park and that one is it. Not yet anyway, but there will be.
Yeah, so maybe as a recap. So market's not looking great. I mean, it's been terrible year. Sentiment very low.
Yeah.
Use cases kind of difficult to find, but that's probably the moment, if you're not really familiar with crypto and the ethos and the kind of goals of this technology, to actually study it, build conviction.
Mm-hmm.
Because on the bright side, basically, what I can think about is first, if you really do the work, you're never sure, obviously, but it really feels like this stuff could be the infrastructure of the new internet.
Mm-hmm.
And much more. Second, if you make the comparison with 2001, people would ask, oh, what's this internet thing? And is it even something? If you believed in it, you still had to pick the right companies or startups to invest into. And so it was very, very risky in terms of failure. Whereas here with crypto today, you can buy probably Bitcoin and ETH and probably have like a bet on like the success of this future of industry. And provided you've done your research and you develop your conviction, might be a pretty interesting bet, because you're already kind of diversifying your portfolio by buying these underlying infrastructures. You don't have to make specific bets on like specific applications because it's too difficult, and probably gonna get yield lower returns. But I don't think that's what matters now. What matters now is if I don't know this crypto thing, I want to either laugh at it, or I want to still think, it's when things are basically crashing and everybody's criticizing an industry that I probably want to get interested, develop conviction. And then if I develop my conviction and I find it really interesting, I have this opportunity to invest into these probably top 2 assets, Bitcoin and ETH, that are the underlying infrastructure of the whole thing, and that are not, yes, the price is affected by all these blowups, but they're still working. They're still working. block after block. And so then once you decide as an investor, I want to invest in this future stuff, use cases by being very, very critical, it's kind of not really there, but like I understand the actual advantages that it brings compared to the current system, which are, if you do your research, in theory, at least they're very, very compelling. And so then and I have the opportunity to buy something that's kind of less risky than just cherry picking some protocols. Then the next step is, with what happened now, we just understand that we need to self-custody. Or if we don't want to do that, we need to buy an index or a fund. Basically, indexes don't really exist yet. ETF don't really exist yet. So I think like the kind of like summary of that is, I mean, the goal is like the moment is probably now to look at all that stuff, learn from all what happened, build your conviction or develop your conviction, and realize that even if the use case is not, or the use cases are not that well defined yet, it doesn't matter that much, because you can still kind of front run the future innovation just by buying the underlying assets.
Yeah. I mean, you hit the nail on the head. This is the first time that anyone has the ability to invest in the core underlying structure that makes decentralization possible. And that's, let's just use two really easy examples, Bitcoin and Ethereum. Coin is 13 years old. It was the first thing to exist, and its fundamentals haven't changed since the beginning. That's a really easy investment pathway. And of course, none of this financial advice, but Ethereum being the next smart contracts application potentially, you're effectively betting that the decentralization or the ecosystem is going to be a thing. And those core infrastructure bets is like betting on the internet as a whole. It's like betting on HTML or PHP or TCP/IP. You couldn't make those bets in 2001, but in 2001, you could also have started a services business building websites. You could have started a services business being cybersecurity, or you could have started any type of website selling absolutely anything. And this is the best time for builders. This is the best time for individuals to enter the space, because you've got the tooling here to really grow and expand. The market already exists. The user base exists. It has never been easier to do something like that. And the institution is just proving that there's money behind it. If you're an artist, it was incredibly difficult for you to make it in the art scene. Whereas now with NFTs, you've got a huge audience that you can tap into immediately. And that's just one simple subset use case. So there are lots of really exciting things, lots of really exciting use cases. And the beauty with this market is, for the first time ever, you can take either side of that equation. You can invest directly into a business, or like you said earlier with pooling, you can take the business side of it. So you can have, I always commend it to two sides of an insurance contract. With Ethereum, you can either be the person that takes out the insurance and pays the interest rate, or utilizing pools, you can be the person that gives the collateral for somebody else to be able to take that insurance and earn the interest. So suddenly you've got this double-sided marketplace, which just opens the door up to so much technology, which is so much disruption. And you just need really smart entrepreneurs to be able to build in this space. And you will get heavily rewarded as part of that. So you're right. This is an incredible time to get into it. We are still figuring things out. We're still figuring out how DAOs work. We're still figuring out the real power of decentralized finance. Not everyone needs access to a derivatives market, but borrowing and lending is something that's been around for forever, and people can really get behind that. That's really interesting, but it's a little bit convoluted and a little bit hard. So how do you fix that? How do you obfuscate away from that? These are all of the great use cases that you as a builder can come into the space. And if you don't, as you rightly said, if you believe that this space has a future, if you believe that this ecosystem is growing, which it is, it's growing faster than the internet did back then there's multiple ways you can invest. You can invest through a fund. You can invest very, very slowly by dollar cost averaging into two, three direct tokens like Bitcoin and Ethereum, for example, being the two largest. They're probably the two largest adopted. So those are really easy to make investments in. But also we write a lot on productive assets, and those things are, again, really easy to get your head around, because you don't need a view on Bitcoin or Ethereum in order to be able to understand a productive asset. There are people that use a system. The people that use that system pay a fee to use that system. That fee is collected, aggregated, it's pooled, and then it's distributed to the token holders. That model you can do a discounted cash flow on. You don't need to be a crypto expert to understand that model. And these are going to be the business models of the future. This is going to be where people spend time. This is going to be where people invest their time and their energy. And this is going to be the thing that drives the market, because that's going to be the disproportionate reward.
How far are we from that?
Look, a week ago I would have said not that far. Now we're really far. I mean, the wave of regulation is coming, and it's going to be way worse than what people realize, because governments will do what they always do, and they overcorrect. They're very good at reactive and very, very poor at proactive. Where governments failed in this instant was to regulate some of these big centralized authorities to a degree that now retail has been hurt. And with FTX now, everyone, including businesses and treasuries, have been hurt. And it's because they were too slow to act. They didn't allow for enough flexibility for businesses to operate in the US jurisdiction, for example. So they pushed it overseas where there's no regulation. And that's going to be a real barrier. I think it's going to be really challenging for businesses to hold coin or any crypto on the balance sheet, for example. That's going away for a long time.
Another great narrative that is going away.
Yeah. That's going away for a long time. I mean, MicroStrategy, it'll be interesting to see when those guys come out. There was another vicious rumor that Michael Saylor from MicroStrategy, he has to pay. There's a covenant on one of the loans that he used in order to buy Bitcoin that says that he has to sell below a certain price, and that price has been adjusted twice, I believe. Again, I can't fact check any of this because it's a centralized authority and those contracts are not live, but then that would be pretty scary for the market. But you can think that endowments, any big institutional investor, to invest their actual cash money into crypto now is going to be incredibly challenging. So future, it's going to take a little while. And that might be a good thing, because, we ran hot. We ran really hot. We grew too fast. Everyone got too rich. Guys that were selling computer generated artwork were driving around in Lamborghinis. So all of that happened, and it's too much. Now we need to really just focus on building core infrastructure, building applications that people actually want to use, as you said. And it will take a long time. It'll take a long time before that trust comes back.
Yeah, absolutely. Okay. So last question for you, bit challenging one. So what's something that you really believe in that you think most people would not agree with?
One thing that I really believe in that most people don't agree with. Okay, so I've got two, a little bit controversial. So I think I think central bank digital currencies are coming whether you like it or not. I think it's the worst idea, and no one that's native to crypto wants that, because it completely destabilizes the privacy aspect and the openness of this entire ecosystem. But if you're a government and you're sitting there saying, if I can get more control, more transparency, and more distribution on the currency that I distribute, then of course I'm going to do it. It's a no-brainer for them. And that's going to be really disruptive. So that's number one. And number two is this aspect of digital identity. There's a very large cohort in the crypto ecosystem that wants to keep privacy and wants to keep anonymity throughout the whole of their online existence. But at some point, you need to interact with a local entity. You need to potentially live in a country and use the medical service. You need police support and protection. So you need to have some way to connect your body to wherever you are. You can't just have a completely online presence. And these are two very controversial things. I'm not an advocate for central bank digital currencies, but I think that central banks will abuse their power, and it will be a no-brainer for them. And then for digital identity and KYC and AML, I think governments will force you into this aspect where you have to use something like that they'll force you to say, yeah, you need the identity on your phone so we can validate that. Oh, and you have to use this approved wallet so that we know about all of your transaction. Oh, and you have to use AUD coin or the USD approved coin, and you have to send it to your approved wallet, which we have your approved identity on. So that, and you can see when saying all of that, it sounds awful. It sounds like an authoritarian regime, but it won't be at the time when they say it. They'll say it's for consumer protection, and it's so that we can recoup taxes from people that avoid taxation, or it's so that we can better appropriate funds. And in reality, it'll be an invasion of privacy. So that's a battle that's coming. And I think this space is, you're going to be very binary here, whether you want it or you don't.
How close do you think we're from the CBDCs to have taken over?
It's a great question. I like to think we're closer than people like, but I keep getting reminded from my co-founder that central banks don't move that quickly, and they don't have the technical expertise to pull something like that off. So I say it's 3 years away, and the rest of the market, probably including him, says it's either never going to happen or it's 5 to 7 years away. And if you think about our market, it changes dramatically every 2 years. So in 3 years' time, it should look very, very different. But identity will be first, and it will be useful in pockets, really, really useful in pockets, especially with something like ZK Rollups, where you don't have to share all of your information in order to be able to prove that you are who you say you are. So that will be very, very interesting. But yeah, central bank digital currencies, I think they're sooner than everyone wants and hopes, and it's going to be clunky and over-regulated in the space. And at some point you'll be forced. But we've got a couple of use cases for that. Like China will be a good use case for that, banning Bitcoin, but then having a CBDC. So we'll see how that one plays out. But in 3 years' time, this market will look dramatically different to how we are today.
Awesome. Thank you so much, man, for doing this.
No, thank you. And look, a quick thank you from my end. Education awareness is probably the most important thing in this field, and high quality content, asking really hard questions is difficult, and high quality information is exactly what you do. So I appreciate you, man.
Thank you, man. It's true. But yeah, it's going to be really interesting to remember to these times, and hopefully we don't forget these times. Things are a little frothy out there.
Yeah. The beauty with crypto Twitter is it never forgets. It never forgets.
Great. Thank you so much, man.
Appreciate it.